It doesn't make sense to live in an apartment here and buy an investment property somewhere else.
From ROI perspective, like they can get maximum value out of one area than the other. How do you think Phoenix real estate market is doing in comparison to other developing cities like Austin, Florida, North Carolina? Is there any yearly tax benefit after buying a home on loan? Yeah. So next question is anonymous. They did not want to be named. So there are four parts to it. The first one is he or she is asking, how should we able to gauge the ROI value of different areas around Phoenix, like Chandler, Peoria, Gilbert? How do they think about it from a ROI perspective, like they can get maximum value out of one area than the other?
That's a very good question. As part of your analysis, whenever we are buying it for investment, see, for primary home, you go and put more emphasis on the location that is convenient for your regular commute or the schools and where you work. But when it comes to investment property, immediately we jump to the analysis on the rental statistics. How much properties are renting in that area and the ratio to how much it is coming for purchasing it. In commercial real estate, we use a word called cap rate. Cap rate essentially is a ratio that clearly tells you how much money that you are putting in or purchasing the property for and how much rent you are getting.
Okay.
But for residential real estate, cap rate is not as relevant as you look at a cash on cash return. So how much cash you're putting it as down payment versus how much cash you're earning after paying all your expenses every month,
Okay.
including your mortgage, your taxes, your HOA and all that. If you look at Chandler, Gilbert, and Peoria, they're very identical. They go hand in hand. Chandler and Peoria, the prices are very similar. And then Gilbert, the prices are about 10 to 20% lower than that of Chandler. And rents are also commensurate to that. So in Gilbert, the rents are cheaper than that in Chandler. The thing that I would focus on is hyper focus and zoom in and see what kind of property that they are buying. And if it is closer to the schools, closer to the freeway system, then I would say buy Gilbert because Gilbert is growing right now. There is lot of news around Gilbert. It is like one of the most family-friendly cities. So every city lobbies to get on that list, and Gilbert happens to be one of the most family-friendly cities in the country. So that has attracted so much of people to come to Gilbert and stay. Gilbert is not too far from Chandler, and now Queen Creek is also growing a lot. So that belt is growing a lot. So I would bet on Gilbert more than that of Peoria. Now, Peoria has competition from all the West Valley cities. You have Avondale, then Goodyear, then Buckeye, even up to Levine. That entire belt, there is so much of inventory. With that inventory, of course, there will be competition. People who are looking for properties in Peoria, they're able to get for a cheaper alternative in Buckeye or even Avondale. So they are moving to Avondale because amenities are similar. With Gilbert, there is not as many opportunities. So I would say Gilbert is better for me for the long term, but cash flow wise, they just go hand in hand. They're very, very similar.
The next question from the same person is, how do you think Phoenix real estate market is doing in comparison to other developing cities like Austin, Florida, North Carolina?
See, there is lot of speculation. My first question to them is, how many homes are you trying to buy? Are you trying to buy one in each city? Or are you trying to develop a community in that city which needs lot of people to be attracted to your house? If the plan is to buy only one house, and if you're trying to compare all of them, I think they should buy in a city instead of saying Arizona, right? Like in Arizona, we have so many options. Like we have Gilbert, Chandler, Phoenix, or so they can go to an area wherein there is lot of employment opportunities, and there is a good chance that homes will be appreciating, and there is a lot of renters because ultimately you want the cash flow.
Yeah.
I remember during the recession time, when home values went down, people bought the home for 500,000, and then the home values went down to 400. So people walked away from the homes. People, because they put only 50,000 down, they bought the home for 500, The same home now they are selling it for 400, like literally next door. So they paid 50,000. Now they are making almost 50,000 profit by buying something cheaper.
Yeah.
So what they did was they walked away from this home and then bought the new home. It was bad that it was happening for the economy. It was not illegal, but not ethical at the same time, right? But a lot of people had to walk away. Some people lost their jobs during recession, and then people had to lose the house for foreclosure or short sale. It happens. So now when you're considering Arizona, Florida, Texas, and all that, you have to be smarter and you look at the mortgage laws for each state, because it could happen wherein home prices could drop like a bomb. In Florida versus Arizona, in Arizona, let's say if something happens, you put 10% down and then you lose your job, or if there is a recession and then you foreclose on the home for some reason. Nobody plans for a foreclosure. It just happens like that because you put yourself in that situation, it happens. None of the people who went through foreclosure say, yeah, I plan to do foreclosure in 2 years. Nobody says that. A lot of people who are high net worth people had the foreclosure. So if it happens in Arizona, they cannot come after your other assets. The bank just gets your home back and you're done. You're done. You can get another mortgage for 4 to 7 years. You can have a fresh start in 4 to 7 years. That is Arizona. Florida, they can sue you and they can get a judgment and they can keep siphoning off money from your checking account until they recoup all the losses. The lenders have the authority to do that. So it's like they call it a recourse loan in Florida. It's non-recourse in Arizona. So we are going into a lot of legal terminology and more complication for it. But that's something that I would consider. If you buy it in Arizona, even though the rate of appreciation could be lower than what you find in Florida, it's a non-recourse loan in Arizona. So God forbid if hell breaks loose, you walk away, nobody is going to sue me for the difference. In Florida, they could come get 100,000 and lose my house. A lot of people lost their life savings because of that. So you have to watch for all those. It's not easy for me to say, okay, just go to Arizona. Even in Arizona, you have so many cities. You can put it in Casa Grande or you can put it in Phoenix, Gilbert, Chandler. Unless you're planning like a big mega project wherein you need 100,000 families to move into your real estate development, for one house, I wouldn't overanalyze. I would just go with the city that you know, that you like, and then put your money there. If you're buying 2, 3 homes, I wouldn't overanalyze it. Overanalyzing something causes paralysis, and you can't make a decision quickly.
I think why this question was asked, it will be clear in the follow-up question. So he or she is asking, should we keep buying home only when we are totally sure of settling in that area? Or can we generate enough return if we hand over the property to the rental management? So they are planning from an investment perspective, whether to buy where you live, or you can buy in a different state as well and hand it over to a rental management company, and then you can get the cash flow on that. Which one is it better?
Yeah. I mean, world is a small place. You can buy it anywhere. There will be no difference. I mean, I have clients who own properties all over the country. You will have no problem managing it remotely. You can hire a property manager, and there are so many professional ones out there. If something happens, you need to send a handyman anyway. So you'll do the same from here with apps like Thumbtack and Yelp. You can easily find handyman to maintain. It doesn't make a difference at all. You just go with the area that makes sense.
One point I would like to add, we covered it a couple of times, is if you buy, plan to stay there for at least 2 years in the 5-year time frame, in last 5 years, so that if you decide to sell it as an investment when the market is hot, it's a seller's market, you sell it for good amount, then you won't have to pay taxes on the profit that you make.
Correct. If you lived in the house for 2 years in the last 5 years, you don't pay taxes. So yeah, then it makes sense to buy somewhere wherein you live. I know families who upgrade every 2 years. They buy a home, they move into that, they make some improvements, then they sell it in 2 years, take the money, roll it to the new home. And granted, they are buying a home 2 years later, which is more expensive, but they keep on rolling. And then once they're ready to the retirement, then they downsize it. They have enough. So because price per square feet is what they are paying attention to. They buy it at $100 a square feet. Then they sell it when they go to $125 or $150 a square feet. By the time they are retired, they are buying it at $400 a square feet. But then they are moving from 5,000 square feet to 1,000 square feet. So it works out well. I would say if you own a primary home, that is the best way to where you invest your money, wherein you live into that. It doesn't make sense to live in an apartment here and buy an investment property somewhere else. But if you already own a primary home here, if you know the area, I mean, you are living there because obviously there is employment and you know there is schools, good schools and all that. I would say try to buy around your area. But if you think that there is somewhere else in a far land wherein it fetches well, as long as it's in the same US, it's the same. Management wise, there is no difference. It's just that you don't see the house so often. Even if it is here, you see it once in 6 months or something that you can fly and see it if you really have to. But most of the time, property managers handle it.
Is there any yearly tax benefit after buying a home on a loan? Like your income is considered less or some other interest is considered as part of tax benefits. Is there anything like that?
Yeah, for investment properties, all the mortgage interest that you pay is deductible. And of course, the depreciation amount that you calculate, your accountant calculates the depreciation. So that is tax deductible. That's going to help lower your overall tax burden. For first time home buyers, there is a limit on how much you have to earn, and they let you deduct all the interest that you pay for that also. So there is lot of tax advantages, and we talked about how Donald Trump paid zero taxes. It's all because of real estate. All his depreciation from the assets that his entities owned were able to help him depreciate all the money. That way, you don't pay as much taxes on your income. So, real estate is the way most of the rich not pay taxes. And anybody should be able to buy real estate easily, get the depreciation, and get the tax advantage.
I have one follow-up question on that. Like when we are talking about depreciation, who who will be doing that analysis? Like, does it come from city? They'll be giving you the new rate like this year because of certain economic situations. The rate has come down from 500 to 450. So your value is 450 now. So you have a chance to adjust that with taxes.
No. There are two aspects to it. One is the property tax. Property tax is determined by the city. The local city determines property tax with the county. Right now, the Maricopa County in this area works with each city and determines the property tax. So each year it goes up or down, but varies. So that is one. The one with the depreciation we are talking about has nothing to do with the property taxes. It is relied on how much your purchase price is. And then based on the purchase price for commercial buildings, you just divide the total value of the developed asset and divide it by 39 years. And whatever is the number, you keep depreciating it every year. And for residential, it's lower. You can only depreciate the structure. You can't depreciate the land. Taking it to the next level, there is something called cost segregation that we do. So this is just what we do is for a building like this, right? For a building like this, there are cost segregation specialists who come in and then they just break down the building into small modules and develop the total value of the building for the development of it. Like they can separate the doors, the doorknobs, all the faucets, carpet, tile, everything separately. And then they come up with this cost segregation study. And then you can use the entire amount to depreciate and reduce your taxes. So there is a lot of ways you can reduce taxes once you own a real estate. If you don't own a real estate, there is nothing to really even talk about, right? So the first step is to buy so that you can determine if cost segregation makes sense or just a straight line method makes sense. But either way, you can depreciate. We do cost segregation. That way, you can accelerate the depreciation. Like instead of waiting for 39 years, you can just front load it, meaning that the first 2 years you can take most of the depreciation. And then after 2 years, okay, then the argument might be In third year, you're not getting too much of tax depreciation. What would you do? In third year, I'm going to buy another two assets and I'm going to do segregation again,
Okay.
so that you save on your taxes and you use that money, buy two more assets 2 years from there. That's what the government really wants us to do. They want us to invest money over and over, and you just follow their path, and that's how you save taxes.
That's incredible. And I love the questions, guys. Like
Yeah, the
the
great
kind of
question.
information that I'm hearing, it's amazing. It's just mind blowing for me. So I thank you for asking these questions. I love the questions and the answers are incredible.
Thank you. No, no, I love it because not only these questions, it's very hard to get an answer, straight answer from Google, like you said. Sometimes we are just going like round and round, and we don't know what the response will be. But as always, you can talk to your CPA. CPA should be part of your team. Like for your financial success, you need to have a good CPA. You need to have a good real estate agent. You need to have a good mortgage broker to help guide you, and of course, a financial planner to help guide you and walk through the process. And as part of what the CPA can suggest you is, if your income is paid this year, you have a bonus, and then you have this extra income, you did overtime or whatever, then the CPA should tell you, okay, buy a house right now and do cost segregation on it, so that you can deduct maybe 30-40,000 this year, where you don't know you have to pay taxes. Because if you pay taxes, the government is taking 30-35%. You might as well use that 35% and put down payment on a house and buy another house. Makes sense. It's a no-brainer. If you don't know, you don't know. If you know, is when you can implement.
Yeah, and I think when you dig into this field for long enough, these are some of the things that you start seeing automatically because you keep hearing about it, you keep reading about it, you have a lot of knowledge, a lot of confidence, a lot of clarity, and then that's where you get ideas and you make more money.
Yeah, I mean, once we know it, then when the opportunity comes, then you can think like, if you know about this, what we are talking about, like cost segregation and depreciation. If you have a big income coming in, then immediately your mind will trigger, oh, I heard Kiran and Sunil talk about this cost segregation. Then you can ask the question to the CPA. Then you can go and buy something so that you can pay less tax. Otherwise, if you don't know about it, you just pay tax. You do HR block and they'll just say, okay, you have to pay 60,000. You're like, what is this? Sunil is able to gather the information, and we have the platform to talk about it. So I want you to subscribe to this channel and then share it with people, so that if it inspires somebody, or if they are able to pick up a few nuggets here and there, that will be worth the time. Sunil has spent a lot of time on this, and we have gathered so much of information for everybody. So it will be very helpful if people use this information.
Most of the information that I'm getting from your answers is not just for today. Like this is age old wisdom, 20 to 25 years of experience, strategies that you have been sharing. So it's not like it will be relevant just today. Future generations, your kids, your friends, relatives, whoever is coming here newly in the country, everyone I see might be able to benefit from this kind of information. And then again, it's a playlist. We are going to create a lot of videos that are going to have this knowledge. So if you subscribe, whenever we add something new, you will have a notification or you will have it in your list, so you will be able to access that easily.